All right, going live again. Share screen. I think there's a link for this. Let's see. There we go. All right. Let's see if anyone winds up joining this thing again. Okay. My plan for this evening is to comb through the watch list a bit more. I enjoyed doing that last time, unless I get sidetracked. So I'm in the stock tracker. Let's see. I've got 120 names on this thing, and I probably need to whittle it down to a more reasonable number. So let's start with clearing out the low. I rank this by low, watch, high in terms of my interest level, and then I've got holdings on there as well. So I think what I'll do is I'll start combing through the tracker, chip away at some of these low ones on the list, see if I should just punt them all together and get them off here and stop following them. Maybe they're worth another look, or something else entirely. I don't know. And then we can move on to the watch portion of the list. That's the plan. That's what I'm going to go through first, unless I get sidetracked with something interesting, and then we can go from there. When I set this tracker up, I dropped in the percent of 52-week low. I love watching names that are hitting the 52-week low, especially if I've already done some work on it and I'm comfortable with it and it's just kind of plumbing new lows. Then I like to keep a closer eye on it, see if it's starting to, if they're making momentum on whatever the plan is and it's scraping lows, then I don't know, I think those can be interesting. So of my low interest level list, right? So watch list is high, means like top of my pile. Holding, I already own it. Watch is, I don't know, some kind of middle ground, like I'm keeping an eye on it loosely from a distance. And low is like I've done some work on it and it's at a price that doesn't interest me anymore. That's kind of the general framework behind this list. So I want to comb through the lows and like see if we want to purge any of these first. So I'm going to start with the ones that are really, really at their lows, like the lowest ones on the list. So far, there's a bunch of cable, right? There's a bunch of cable on the bottom of the list. Charter and Cable One. I've looked at both of these in the past, and I don't know that I could ever really get comfortable with this, even if they keep just working their way lower. Oh, Next Star, yes, we'll get to that one. Hang tight. Good comment. Charter. Oh man, look at that. That's just awful. I don't know that I'm going to be able to do anything with this, but I feel like I want to watch it because what does that industry look like in 2 or 3 or 4 or 5 years even? I don't know, right? And at some point, maybe those things get beaten up enough that it's worth keeping them on like the low level of my watch list. So I'm going to leave those alone. Curbline, I think I talked about this one last time. I don't know. I think a REIT with net cash is just really pretty fascinating. So I'm going to leave that one alone too. I'll leave that one alone. Black Diamond, I really only watch that because of Civio, and I hope that Civio buys their accommodations business someday. Black Diamond, let's see what this thing has done. That's had a pretty good run. I'm gonna pull that one off there. That one's not really doing me any good, other than just checking on how the accommodations industry is going. Fulgent, this one was tossed to me by a friend. I still haven't done work on it. I should just look at it so that I can decide whether to move on it. Let's see, Gen Digital. This is the old Norton LifeLock. I, for some reason, love this business. Let's see. This business is the type of cash flow that I would love to own privately. Like, it's an incredible business. Let's see. Okay, and they think they did a dumb acquisition and they put a lot of debt on it. And I think that's why I don't like it anymore. Originally, they sold their corporate business to Broadcom or Avago at the time, and now they're left with like the consumer Norton LifeLock business, and then they bought something else. I can't remember what it was. Ton of cash flow, and this is the CapEx line, right? Or this was the CapEx line before they bought that business. So the consumer side of this company was spending $6 million a year on CapEx for almost $1 billion of operating cash flow. Like, that is just insane to me. I don't know. I think that's so impressive, but I don't know. $31. I don't think I would do anything with that here. So let's punt on that. Gosh, I keep Oxy on here just because of Buffett, but I don't know that I could ever really see myself buying that. Sally Beauty. I've owned this one in the past. And what has this thing done since then? What's this thing done? So this was formerly a high flyer, high multiple compounder type stock. Sequoia owned it at one point. And then it just stopped working, like it stopped growing. Let's see. Here's the growth rate from a revenue standpoint. Let's see. Let's pull this back even further. Yeah, so at one point, this was a nice growing company, right? 2017 stopped growing. And then really it's been organic decline since then. This period doesn't even really count, right? The 2020, 2021. So yeah, it's just like a slowly declining business. Generated a ton of cash, generates a lot less cash now. Yeah, still a good amount of cash. And what is this thing? 250 million of operating cash and 100 million of CapEx. And the market cap is, okay, 1.3 billion on 250 million of operating cash. I mean, that's pretty cheap. That's pretty cheap. So I don't know. And look at this move here. It's still just kind of drifting around from between 8 and 11 to 12 to $13. So it hasn't really done anything. I'm going to leave this alone. I don't know at what point this gets interesting. If you tell me the debt is now nothing, like, are they net cash now? No, but they're just slowly chipping away at it. I'm assuming that's where all of their cash flow is going. Yeah, repaying debt, starting to buy back some stock. Okay, I don't know. I'll revisit this. We'll upgrade that to watch. Scholastic, I don't know. I'll watch it just in case they sell the real estate. Teva, I owned this one and it worked great and I like it. And it's still crazy levered and it's had a really good run. Like $9, it got to $22 at some point, and I sold it. And now I just don't really watch it closely. But they're growing revenue now, so it's kind of interesting. Like, it's turning into a growth story. So, gosh, I don't know. Maybe I'll just leave that as low. All right, people that are joining us, we're just going through the tracker. I'm working from the bottom of the list, scraping the lows. I sorted by high, watch, which is basically medium, and then low. And I'm just taking a quick look at the lows to see if I should jettison them from the list entirely or move them up the list to like watch them loosely or do some work on them. I don't know. Teva, I'm punting this. It's not worth it. Oh, right. I started at 120. We're down to 116. Great. Urban Outfitters. Oh, this is just such a clean story. I started tracking a way long time ago. I got aggressive and I was going to try and notate which companies reported based on GAAP results versus adjusted results, because I really like companies that just use GAAP income as like this is the EPS that they report. And Urban Outfitters was one of those companies that they use unadjusted numbers, kind of like Hamilton Beach. And I liked that, but I wrote it up and had a good run, and now it's not nearly as cheap. So I don't know. I'll watch it, because if retail gets beat up again going into the tariff thing, then it could get interesting. All right, I'm getting comments. Nexstar and PRTH. Good growth, good margins, cheap valuation. They just cleaned up their prefs, so more bottom line to common. Nice. I love that. I love that theme. Cleaned up the prefs. I feel like I should add that to my theme tracker. Whoa, sorry. I have this list of like themes, kind of like the what is it? What's his name? One Up on Wall Street guy wrote this. There's 6 story types, right? I feel like the cleaning up the prefs is a good theme. Sorry, we're getting sidetracked. I warned that there was a chance we'd get sidetracked and look at some other things, and that's what we're doing. Balance sheet cleanup. Hang on. Here we go. We'll do this in here. Shoot, there we go. I'll clean up / takeout prefs. That's like the same story in SNCR, which I really like. PRTH. I don't own it yet, but I will someday. Okay, PRTH, Priority Technology Holdings. Okay, hold that thought. Put a pin in that. We'll come back to that. All right, the low end of the watch list is good. We're going to leave the rest of those alone. Let's move to the watch category. This is the biggest. Let's see, there's 116 names on here. 13 are watch, 13 are high, 75 are watch, 7 low, 21 holdings on the list. That's the current state. Let's filter this by 52-week low. That's like inversely related to my interest level. If it's low, I'm interested. If it's high, I'm not. So maybe let's look at the stuff at the top. Oh, I do think, why did this not round off? Get rid of those. Get rid of those pennies. United Foods, I do find that interesting. So I still think this is kind of high on my watch list. And I'm interested. I've looked at 2 names recently with this idea of like a management team that came in and set a 3-year plan, and they're 1 year into executing that 3-year plan. UNFI and NATL, NCR Atleos are the 2. And I find them both pretty interesting because if they hit those things, then they're really cheap. They can work. And when you've got progress and that progress isn't baked into the story already, like that's pretty fascinating to me. So UNFI is still pretty interesting. Like I might even label that as high. Sleep Number, I haven't done any work on this, but I like these turnaround, beaten down type ideas. Let's see. And this is just a horrendous chart. But it's up a bit. So I don't know. Unless you tell me that SNBR is interesting and worth looking at, I probably won't look at this one. Unless the financials are just obviously improving in some way. And they are not. They really aren't. Revenue is not really turning the corner yet. Earnings are just pretty horrendous. So I'm just going to punt on that for now. And I'm okay not making money on that. SNCR has a lot of debt. They do. Well, they kind of do. We won't get sidetracked on SNCR. I looked at that last time. We'll come back to SNCR if there's time. I'm going to try and keep this to 45 minutes because I told my family I would. BW. I actually own this, so sorry. Let's get that one out of there. Turning Point Brands. Oh man, this would be really hard for me to buy again because I owned this and it was super painful for years. And now it's really working, like really working. Like, wow. I still use Y charts. I don't really know how I feel about it. It's not amazing, but I actually like their screening and their charts and stuff. So let's see. I mean, this was just a really painful hold for a long time, and now it's worked a ton. So I'm taking that off the list so that I don't get upset when it continues to do well. All right. Leet. I never actually did any work on this name. And this was such a popular name, and it just struck me as like a consumer, really a consumer-oriented DTC type business. I know they have wholesale relationships, or I want to say they have wholesale relationships, but I just didn't find anything special about this company other than the fact that it was really popular at like 20 plus bucks a share, and then just got clobbered down to, I don't know, $7 a share. And now it's coming back. I'm just not going to do anything with this because I own a retail business and I don't really need more retail exposure. Okay. CompuMed, I don't know. That's kind of played out. Advanced Auto Parts, gosh, it really got super beaten up, and I got close to doing something with it, but the results have just continued to get crummy. Yeah, it's got down to $33, and now it's worked its way back up. I just can't imagine myself ever buying that. So sorry, AAP. Ooh, Hanesbrands, they just had that buyout offer. I was thinking about, you know what? I'm going to do it. I'm going to add Gildan to the list. Is that how you say it? Am I saying that right? And you can see I have a very non-scientific process for adding an interest level. High means I'll be more likely to take a look at it. All right. So we'll take Hanesbrands off the list, because if I do work on GIL, then I'll make my way back around to HBI if it winds up looking interesting. But they're getting bought out, so that one's now played out in my opinion. I own that back in April and sold it, so nothing left to do there. All right. Do I have to say that this is not financial advice? Is that a thing? I don't know. It isn't. All right. Other names on the watch side of the list. Let's see. Boeing, I just know that there's nothing that would get me on that. So I'm going to take that one off the list. GXO, I'll keep following that. Cheesecake Factory, let me get rid of that. There's so many cheap restaurant stocks. Those things are all totally annihilated. Let's see. Where are restaurants? Koifin has these great, you can create these watch lists with various industries and add all these great metrics with it. I love it. I just wish I could sort through the industries I've already created a little easier. There's fast food. Did I put all other industries in there? I guess I did. Cool. Let's see. Some of these have recovered a bit. The industry is not nearly as beaten up as it was a couple months ago. So here's year to date, right? Year to date, you've got a couple of them that are positive. Potbelly, Noodles, Cheesecake Factory, Brinker, Red Robin. 3 years, though, a lot of these are still pretty beaten down. Bloomin' Brands, man, that thing is just still got torpedoed. And I think they sold a portion of their company at what looked like a not stellar price, if I remember correctly. And I don't. Wow, they're still paying a dividend of that magnitude? I guess so. Well, they cut it. Okay, they lowered it. Interesting. Okay, so Bloomin' stays on the list. Where is that? Oh, that was in the low category. Let's bring the low category back. Can we do that? There it is. Let's take another look at this thing. It's plumbing its lows. Where did I look at it? Bloomin' Brands. I looked at it about a year ago. It was $18. Wow. $18, but they were guiding to $260 in earnings. What are they guiding to now? All right. If you're just joining us, we're combing through the tracker. We're trying to cull the lists, right? The low tier of the list and the middle tier of the list. Where's the guidance? There it is. Oh, wow. Okay. $1 to $1.10. So this thing's just gotten hammered. Okay. We'll still look at it. We'll still leave Bloomin'. We'll still leave blooming. All right. Okay, this is filtered by 52-week low. I'm just going in the reverse order and trying to eliminate stuff that's like closer to highs than it is to lows. Red Robin, I'm not going to do work on this. I looked at it a while back. It's not really my cup of tea. Same with Capri. I don't think I'll do anything with that. Geldwen is like in a horrendous turnaround situation and just completely beaten down. I refuse to consider restaurants. Yes. That's awesome. I said the same thing, and then I bought Jack in the Box, and it went down 40%. And then I sold it. So I should be saying the same thing. Oh, gosh. Geldwen, less than $4 to $5. It was a $30 stock. I'm not going to figure this thing out. I'm not close enough to the building suppliers. All right. We're making progress. We're down to 107 names. This started at 120 before I started this. So I'm trying to whittle it back. So I've got less work to do because I already don't have time to look at this stuff. Pink, I'm going to pass on this unless I want to keep this PRTH. We'll add that to the list. Pink investor relations. Let's see. Unless they're doing something interesting, I'm taking this one off the list. Show me my big beef with this company. I thought it was so interesting. They sold a business. It's like a GPO, right? Group purchasing organization. They sold a huge chunk of their business, took the cash, and they did an accelerated share repurchase, which I think are super dumb to do. They should just take the cash and deploy it over time. And they did it at a bad price. And then they did it again, and then things didn't work, right? Like, let's look at the stock price. Just horrendous capital allocation. And then at the same time, I just can't get comfortable with a business that has, look at this right here. This is their corporate line, right? So they've got two segments in the business, and then they've got the corporate overhead. $38 million loss on $107 million of EBITDA just in that quarter. And that's on $250 million of revenue. I mean, that's more than 10% of their revenue, more than 15% of their revenue is going to corporate overhead. That just seems insanely high relative to other companies that I'm looking at. So it's off the list. We're done with that one. Cool. Done with that one. Great. Okay, what else? Hasbro. Wow, that's rebounded a lot. I was going to look at that because Hasbro really got beat down. I thought it was it was a favorite name because of the Wizards of the Coast side of the business, right? And then this thing got just kind of hammered, and I don't remember what it was for. Maybe it was tariff talk. I don't know. But it got down to like $40-$50. And I guess now it's coming back a little bit. So it's at $80. I'm taking that off the list. Can't see myself doing any work on it anytime in the near future. Dexterra, I really like that business. I don't know why I don't buy it, but I don't. So I'll leave that alone. BTU, I saw the news that they canceled that deal. I don't own the stock, but I did buy some call spreads, some leaps. So hoping that one goes to 20. AirT, I really like this name, but I feel like it's so thinly traded. AirT stock price. It's so thinly traded that I feel like I would buy it at like 15, 16, 17 bucks and then not at 25. But what I really should do is it has this preferred stock, this AirTP. AirTP is the ticker. It's trading at 19 bucks. It pays a $2 a share dividend, and it matures in 2040 something. So like 20 years from now. And Nick Swenson, the CEO, he owns like half of this business. Doesn't take a salary, nothing, right? I mean, hugely vested in this company. So to me, that's a really interesting pref. Probably like 11 to 12% yield to maturity for 20 years. I bet that probably outperforms the market. The only challenge is it's a really confusing business. It's a really confusing business. So AirTP, I really like. preferreds. Here, TP. What is technically it's an 8% yield. Trades at through 2047, I want to say is the maturity. Yeah, I labeled it as a jockey bet. So let's see. Do I have any evaluations on any of these? I guess I do. Let's see. I guess I could lean on some of these. Yeah, so here you can see my Urban Outfitters. I was when I first looked at this thing, I was valuing it at 15 times earnings and then adding $8 a share in cash. And now it's considerably higher than that. Let's see, I like trading preferreds, especially at the end of the month, quarter, when the ETFs rebalance. Yeah, I don't own a lot of preferreds, but I like the quirky ones, you know. Let's see, GXO. GXO is also kind of an interesting, like, long-term, multi-year strategy story. They've got a new CEO. It was the old XPO spinoff, and that fulfillment industry with the e-commerce exposure, it's pretty interesting, and they're a scaled player, with Amazon being probably the most scaled player in that space. NCR Voyix, I bought some of this during COVID, or not during COVID, during the tariff thing. Back here. Yeah. So I recently sold this one, Voyix. Let's see. I wrote something on it. Yeah, I don't know. They sold a business and then have kind of a capital allocation and inflection opportunity because it delevered their business a ton, but it's the retail hospitality point of sale business, self-checkout, and grocery stores, that kind of thing. So I don't know. This is probably lower on my list now. Potbelly, this was a turnaround that's now kind of growing, and I feel like, yeah, the turnaround's done, and now it's in a different phase of life. So I'll move on from that. Disney, at one point I thought it was interesting, but I don't think I would do anything with that. Same with MGM. I've looked at the IAC. I like IAC, but I wouldn't want to own the MGM portion of that. So we'll punt on that. OpenText. OpenText is interesting. I don't know if anyone follows this. I don't know enough about software to get involved in a business like this, but the cash flow statement is just phenomenal. Well, maybe it isn't phenomenal. I guess that's pretty middling here for the last couple of years. Really hasn't gone anywhere. Oh, they sold a huge business, though. That's why I got interested in this. Yep. They acquired a huge business here, and then they sold another business here and used that to repay debt. And now they're in a position. That's it. Cash flow, bought a company, sold a company, repaid debt, cleaned things up, and now they're buying back stock. That's the play. Now I see, sometimes I just jog my own memory, and now they're really ramping up the buyback. So 544 million in the last 12 months, and it's an $8 billion company. So it's trading at like 10x operating cash flow, and it's a business I don't really understand all that well. So we'll take it off the list. Take it off the list. Oh, Humana, I just can't ever see myself buying that. So that's gone. Denny's. I looked at all the restaurants. So I went through a restaurant kick like last summer. So I looked at Denny's. So I'll leave it on the list. Oh gosh, I know you don't like restaurants, but we're gonna leave it untouched. All right, what else do we got on here? Oh man, Thrive. Does anyone follow Thrive? I just don't understand this name. It's like a good co, bad co, waiting for the crossover to happen, and it's just not happening. And I know a lot of people really like it or liked it at one point. Right, here's the chart. $578 million company, and really the only thing that I just get fixated on when I look at it is, this is your operating cash flow line, right? 347 million down to 90 over the last couple of years. and you still have a bunch of debt. And I know they've repaid debt, but not that fast, right? So the debt, like debt to operating cash flow. This is not free cash flow. Debt to operating cash flow, like that multiple is actually expanding because cash is falling faster than the debt is. So I don't know about this one, but I'll keep it on the list because everybody loves it. Someday it'll get interesting. Let's see. Can't remember why I looked at this MATW. That's why I try and leave a note for myself. Let's see. Selling assets, 900 million market cap. Sold asset for 350 million bucks. Let me just. This is a great one that I need to jog my memory on. All right. What do we got? What do we got here? Show me the divestiture. Okay, here it is. 231 million last 12 months. So now I guess we don't really know what cash flow is going to look like. So maybe this is worth a look. What does the balance sheet look like now? They just sold an asset. Stock has gone not really anywhere. Not really anywhere. Just sold an asset. 679 million of debt, which is probably coming down, or maybe that's already come down. Maybe they're holding it in cash. No, it's not there. Long-term investments, 280 million. See, sometimes the ticker data is like, is it really accurate? You know, switch over to this Morningstar view. It's occasionally better. I don't know enough about this company. I don't even know what they do. Oh gosh. All right. I'll take a peek at that one at some point. It's worth looking at an investor presentation to see what's going on. PRAA, I'm going to move on from this name. I've looked at it before. I just can't see myself buying it. Same for Liberty Global. Liberty Global, that's not a name I'll ever buy. All right. Well, man, we're under 100. I started this call with 120 names on this tracker. Now we're down to 98, which feels really great. I want to do a quick look at what's on the high end of the list to make sure this is all the stuff that I want to look at soon. Okay. So here's what I've got at the top of the pile. Let's see, sorted alphabetically, right? AMN Healthcare. This is a healthcare staffing company. COVID spike in earnings. COVID downdraft in earnings. I think it's starting to stabilize. Let's see. Revenue's still coming down. I don't know what the quarterly view looks like. Either ticker is slow or my computer is slow. But we'll get another tab going while we're waiting. All right, full year review. Oh man, earnings are just getting annihilated. Absolutely annihilated. They're writing down a bunch of stuff, which means they did an acquisition. They did a bunch of acquisitions, and now they're writing stuff down. Oh man, they did a bunch of acquisitions during COVID. Oh no, but cash flow is still stable. Look at that. 250 million, 300 million. So this has the cash flow actually hasn't even really come down. Now, I guess a huge chunk of that's working capital related, but that kind of makes sense with revenue coming down. And it's a staffing business. They're repaying debt with that, which is good. How much did they lever up to do those acquisitions, though? That's the question. Okay, 916 million. That's not too bad. Let's see. So 300 million was the operating cash flow number. Let's see. 310 million, 55. So here's your free cash. And the latest TTM period has 135 million of working capital inflows. So really it's like 100 million of free cash. 100 million free cash. And it's a $700 million company, $800 million company. Okay. I'll do some work on this one. At some point, that'll be a quick value post. D now. I should just buy this name. I say that every time we do this. They're buying MRC Global, merger of equals. It's an MRO company in the energy space. And I think they're going to add a ton of value through that acquisition. So I priced it at 8 times EBITDA on fiscal 27, gave them full credit for their synergies. So that was maybe pretty aggressive. So I think maybe what I'm doing right now is just sitting around waiting for a better entry point. Fluor, is that how you say it? This was the green light purchase. Isn't that why everybody's talking about this? And they own a whole bunch of NuScale. I think that's the thesis here. I'm pretty sure this is just a plain vanilla engineering and construction firm, right? NuScale. Let's see. Investment in NuScale. There we go. $5 billion. Oh, they got a whole bunch of investments. Those are just total assets by segment. Okay. Investment in NuScale. And NuScale stock price. What's that? Oh, damn. So I feel like you'd want to hedge that out or not own it. What is this? Is this not taking me to the... Where's your 10K? Oh, that's a 10K. So, okay. Those are their strategic priorities, not their segments. Okay, yeah, engineering and construction. NuScale. How many shares do they own? 126 million shares. Is that right? 126 million shares. Okay. I'm assuming that's the right number. I don't actually know. Yeah, all right. I don't know. That's kind of interesting. I haven't read the green light pitch at all, so I don't know anything about it other than I think that's who wound up buying a stake in this name. Let's see. So $6 billion. Okay, so that's interesting. So it's a $6 billion company, and they've got a $5 billion investment in NuScale Power that you could hypothetically short out if you wanted to, maybe. And oh man, what did I do with that? There it is. Let's see. And the balance sheet has some debt, but not much, and a bunch of cash. Okay, so you probably have either a negative EV or close to negative EV stock if you were to hedge out that NuScale position. So I don't know. That's interesting. Maybe that's the bet, but I don't know what the fundamentals look like for their core business. Probably like an engineering and construction company. Yeah, all over the place with tons of working capital movement and like no capital allocation, except they just bought back a bunch of stock. They're probably feeling good about their NuScale position. So I don't know. Okay, I'll do some work on that one because that's potentially interesting. I don't know if anyone read the green light letter and knows more about it. Lendway, I think I'm going to write this one up this weekend for Monday. Yeah, I just did NCR at Leos. So I'll probably do this one. I'll probably do this one next. I just did NCR. I don't know which one's actually NCR, Voyix or Atleos. I wish they would just drop the NCR. I really like this one. I don't know if anyone else thought the thread was good on that, but that seems pretty interesting. But of course, I started looking at it, mentioned it on Twitter, and then AltaFox did a lengthy write-up on it, and it spiked like, I don't know, $10 a share. $10 a share. Yeah, it ran up too much for you too. Same here, right? And Connor was really nice. He was like, hey, I know you wrote about this, and here you go. Take a look. Hope you like it. I was like, all right, cool. So I like that. I like that idea, though. The idea that they could potentially generate $6 a share of earnings in 2027, which looks very realistic to me. And it's now under $38 a share. But at 30, it was really, really fascinating, or 27, whatever it was recently. That was really fascinating. So what did I ultimately conclude on this? Well, you love PBI. I need to look at that. Everybody's really, really high on the PBI, and I haven't done any work on it. Okay, sorry. I just need to update my own notes. Okay, so this is for NCR. I said, okay, if they keep growing earnings at 20% a year, which I think is totally doable, 13 to 14x multiple gets you to $62 a share. So let's just call this 480 times, let's haircut it a little bit, 12. So 12x fiscal 26 EPS 480. Oh, oops, we put this in the wrong place. Yeah. Cool. So that's 53% upside over the next, 18 months. So I don't know. That one's close. That's in the zone. PBI, I need to do some work on that. So I'll expedite that just because everybody really likes it. And the same was the case for UNFI. And I looked at that and actually really liked it because they set out a very reasonable 3-year plan. They're a little more than a year into that plan and doing well. I just hate that super value business so much. Sangoma, I looked at this and really liked this one. Everybody's talking about 5.9 all of a sudden. The UCaaS company, and Sangoma is a UCaaS company, but like they own their own products and everything. They're more like a Cisco than they are a 5.9 or a Ring Central because they do on-premise and cloud stuff. So to me, that one's really interesting and probably a takeout candidate because it's a really small company in Canada, and that's a CEO change story. SNCR, SNCR is just crazy cheap, and they just got this big tax refund, and I don't really understand how good the product is. So it feels outside my circle of competence, which has me avoid it. So SNCR, but it keeps going lower. Like stock price. Let's take a look. Look at that. Well, even in the last year, they just got this is a $70 million company. They just got a $35 million tax refund deposited into their bank account. And they said they're going to repay debt with it. And it's going to save them $3 million a year from a cash standpoint. It's a $70 million company. I'm like, okay, cool. No reaction to that? None? What? Really? So I don't know. That one's still pretty fascinating to me. PBI's valuation is still interesting. What is this thing at? Okay, so last year's had a good run. I know I shouldn't let this stuff influence me, but I do. But it's kind of stalled out in the last couple of months. So, okay, interesting. I'll take a look. I know I need to because I know its story's evolved quite a bit. So this is my list. These are the 15 top of the pile. If I could rank these, there's probably like 4 names on here that I would buy tomorrow if the price were a little bit better. Those are probably, let's see, Sangoma, Synchronos, NCR Atleos, and DNow. Those are probably the 4 like highest on my list that I've already done work on and feel really good about the story there, or the valuation, particularly for SNCR. This one would be more like a trade if I bought it than anything else. And most of these other ones I'm just kind of like waffling on or watching more closely than others. And some of them I still have work to do on. Like I haven't done any work on Weight Watchers. I haven't looked at Gildan, but the HBI buyout, that one looks interesting. PBI, I need to do some work on. I need to dust off my notes on Lionsgate because I didn't look at the spinoff piece of that as much. Lendway, it's coming up next week. I'll do some work on that. Fluor, I mean, if it's a negative EV type situation, then I'll take a look at it. Fulgent was mentioned by a friend. I at least need to do just like a cursory review, like a 30-minute review of it to decide, okay, do I keep following it or do I push it off? And then AMN, same thing, right? It's just, kind of this post-COVID story that's pretty cheap and kind of a niche niche business in this healthcare staffing space. And it feels like someone would want to own that. So it feels like a decent buyout situation as well. So that's the top of the pile. It's like the high end of the list. So, okay, I feel good about that. So 15 names. I feel like I've got a chance to whittle that back down to 10 or so in the next, I don't know, 2 weeks, whenever I can get around to it. So cool. I like drinking the Kool-Aid on PBI. All right. Then if you're using that terminology, then I'll definitely take a look at it. All right. That's the top end of the pile. All right. I'm going to call it a night. I think we've looked at enough stuff. I eliminated 22 names off of this list today, which feels good. And we shifted some things from some buckets. So now I've got 15 on the high end, 54 that I'm loosely following. Some of them I still need to comb through, right? Like still have these ESIP banks on here and DXC. Like, I don't know why I keep following that thing, but I can't help myself. 7 on the low end of the list. And to me, the low end might be, it's like 2 or 3 years away from being interesting. So that's why that side of the list exists. And then 22 current holdings. 10% of the names are within 10% of their 52-week low on like April 7th or whatever Liberation Day was. That got to like 40%. So this thing is, I mean, the market's obviously come back a ton, but there's not a lot of stuff on my list that's hanging around the 52-week low anymore. Like, let's just take one quick look before we go. We'll sort this by 52-week low. What do we got? All right, we got a couple of names on the high end of the list. Synchronos is the lowest. It's the closest to the low 52-week low of anything on my list. Oh my gosh. Oh, HireQuest. I haven't looked at that name in forever. I can't believe that's still trading around $9. All right. And then Lionsgate, which I need to work on. Site Centers, a liquidation story. UNTC, another quasi-liquidation name. So, MDU's gotten back down there. Okay, we're going to stop here. I think we've done a good amount of work. On the list. Hasn't surprised Riley hasn't sold the SNCR stake. Yeah, I think if I were them, and I'm not, but if I were them, the few things that they own, like, actually have a shot of being, these guys still own that. Wow. Oh, I think they're on the board too. The few things that they own, I guess they've sold a little bit. The few things that they own actually have like decent upside left, right? Well, I don't know about Double Down. I haven't looked at that. But BW, which they own a lot of, obviously, and then SNCR, I mean, both of these have tons of optionality to them. Like, SNCR could double tomorrow and it would still be, a 7 times EBITDA business. And BW, it's really hard to understand what's actually going on there. But if the technology that they're developing is real, then to me, that has a ton of upside. And BW has maybe some meme stock capability because it's playing into the same markets that like GE Vernova is playing into, which people are just really excited about right now. So I don't know. Both of those, I wouldn't sell them until they wind up selling those businesses to someone else if I were them last fall and then stopped. Yeah, I think that's right. I think you're right on that. So maybe they cleared whatever liquidity hurdles they had internally that they could just pause and wait to see what happens next. So, all right, we cleaned up the tracker a good amount. Thanks for your help. Appreciate it. Yeah, we'll do this again. Whittle it away a little more and maybe add some stuff. Oh, before I go, okay, you mentioned 2 names that I need to add. PRTH. Let's comb through the notes. What was the other one? Oh, Nexstar. I haven't looked at Nexstar in a long time. It's not even on my list anymore. NXST. Nexstar. My only beef with that one is I know they're going to take on a lot of debt to do that deal, like by definition. What's PRT? Priority Technology. That's quite a name. Technology. All right. 2 new names. I need to start adding dates that I add these things. So let's log a date. Look at that. I got like 1 year ago today. I got real excited and started logging dates, and I have not kept up with it. So, all right, we got dates on those. We'll track dates from here on out. Okay, so these will be 2 new ones that we will unpack next time. That's the plan. All right, thanks for joining, everybody. We'll do this again another time because I enjoy going through this list, and it actually helps me stay accountable and work through this thing. So I appreciate the help. All right, I'll catch you all next time. Have a good one.